This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. This is Joe Rabil. Going to give you a stock market update using the S&P. Actually going to talk about the spider. I do want to go through the market conditions first, and then we're going to look at the spider and 4 time frames. We're at a key inflection point, and I think we have to evaluate some things here just to determine key levels to keep an eye on. Let's go ahead and get into that. Now, if you want to learn some more about some of these techniques, especially multiple time frame trading using MACD and ADX, I would suggest starting with the book. It's at rabilstockresearch.com/book. Also, if you enjoy this content, please hit that like button and also subscribe. All right, let's start out with the market conditions and sentiment at the bottom here. This was actually a pretty big jump in the bulls this week. All right, so we've got to move from 18%. This is the difference between the number of bulls minus the number of bears using Investors Intelligence Sentiment Survey. So it was at 18% last week, and now it's at 24%. But it was a pretty substantial jump in the number of bulls. So I moved this to neutral. I think that's worth noting. We're starting to see a jump in that. Now, this really is going to probably need to get itself back up. I mean, remember, at the peak up here, I think we're up around 47%. The difference was up around 47%. And then at the bottom, we got around 10. So we're pretty much straight up in the neutral camp at this point. All right. When we look at the overbought, oversold oscillator, it is working its way back up towards the overbought level, but it hasn't gotten there yet. So I'm keeping that at neutral as well. The trend and the momentum, none of this has changed. We still have positive trends across the board, and the momentum, the only positive momentum is on the monthly, weekly, daily, or both neutral. Volatility is still negative on the weekly chart, and the daily chart is positive. I'm going to go into that right now, actually. All right, so let's look at this, what's taken place. We've had a pretty good drop in the volatility on the daily chart. That improves the conditions. I mean, ideally what I'd like to see, we tried to break out, but it was after up 4 or 5 days in a row. And if you notice, it was not strong action on the breakout. And then we started to pull back, and this was a big red bar earlier today, and now it's kind of coming back some. Ideally, I'd actually love to have Friday be a down day, maybe an inside bar or something like that. Nothing too violent. I mean, I don't want a big red bar here. Big red bar would be a huge negative. It'd be a failed breakout. But if we have some kind of an inside bar, not too violent, we can work this way back down to neutral, and I think this could set itself up with a little handle almost, make a little higher low, at or above the 18-day and turn the corner. And then if we break out, it's not overbought. So that would be ideal. That's what we got to watch. The next couple days, I think, are pretty important. If we get any kind of violent red bars here, red candles, and it re-breaks the 18 after going to a new high, which was a meager new high, then I think that is a disturbing sign. And I would bet that we probably get a pop in the volatility because the size of the bars will probably grow if we get that kind of a drop. All right. Now, we're not showing a significant amount of volatility recently on the weekly, and that is helping a little bit, but not enough. We've still had these big bars are still counted. It's a 20-period moving average. So we're going to need to see several more weeks before this really rolls the 18 of the average true range on the weekly. So it's going to take a little bit of work. Just something we have to definitely keep an eye on at this point. We're at a very critical juncture right here. So what we're looking for is, again, a little higher low and move to a new high, and hopefully some strength. We want to see a decent sized green bar show up as we break out, especially with some volume behind it. All right. Or we come down and we show a couple red bars, and that would be a big negative, I think, at this point. And I think based on what we're seeing in the ADX pattern, that it could be a huge negative. All right, so let's go ahead and move over into the 4 time frames. Now, let's start by looking at the monthly chart. All right, we're up a pretty long ways here. We've gotten We've been above. We had a great pullback set up back in late 2023, but since that time, we have not tested the 18-month. And, you can go back and look at what happened in 2021. When we get this far away and stay this far away, you tend to be thinking we're on our way back to this at some point. I think at some point this year. Now, it doesn't mean it can't go higher first. Other thing I want to show real briefly is the yearly bar. So we've got this big green bar, and look at how far away from the 4 MA we are. Now, I mean, it's pretty rare. We had a big bar here, and then we had a little follow through, and it actually did not touch the 4 MA. But that is pretty rare where we don't touch the 4. All right, it's not like it can happen, but I think it's pretty unlikely that we don't get some kind of a choppy pullback. I think the highest probability is we see some form of chop over the next few months. It doesn't carry forward, maybe even drops down a little bit. But we've got a lot of air underneath, and it's not a strong position to expect a big, huge bar from here to the upside. All right. So you want to look at that, and that's kind of, looking at how far we are from the 18. It's the same concept. Now, the momentum condition is actually in pretty good shape, although I will mention that DI is not confirming this last move. You see how it's dropping off. We're just not getting any real strength in the sellers either, so it's not, we need sellers to show up. We haven't really had signs of true selling strength, especially in this red DI on the weekly. It's just not strong enough. We're going to need this to pop above 25, get above the green line, make a higher high. Right. And I think if that happens, then we will have failure at this high if it happens anytime soon. All right. And obviously, the thing we've been talking about for anyone kind of new to this show, this market update, this is where, basically the ADX was diverging, but where the concern shows up is here, where we go to a new high, we break out and go to a new high, and the ADX never confirms by getting back above the 25 level. All right, so we've been below 25 through this whole period, even though the market keeps climbing. Now, as I've said for since that time, that it's not necessarily a trigger to sell. It's a condition. It's a weak condition. The trend of this market is showing weak trend strength from this period on. And so we need a trigger, and that is in the form of a big red bar. And I've used this example in the past. Here is the end of the, so the same thing happened in 2021, and then we were waiting for the monster red break of the 18. We had a couple times where we got down below, we didn't have any follow through, but this was a definitive break. It not only closed below the 18, it closed below the 40, and that was basically the end of that trend. We're looking for the same kind of thing. You can see we had a bad bar here, but then the following bar was a gap and snap back to the upside, right? Same thing here, we gap down and snap back. So we need one of those definitive red bar breaks of the 18 week, and I think that's, I don't think it's worth guessing. I don't think we can anticipate that a little bit, but for all I know, based on what's taken place on the shorter term time frames, it's very possible that if we don't get any follow through selling on Friday, that we could be setting up for a move, a trading move to the upside, because this does not look that bad. The MACD is in okay position. It's already confirming by making a higher high with price. And we're not showing a lot of selling strength on this time frame either. We don't have a lot of buying strength either, and that's why both of these are together and sitting here, and that's why this ADX is way down at 6. It's pretty rare for the ADX to be this low. We can go back historically and look at this daily chart. I don't think I've gone back 2 years. I mean, let's just see. Has it ever been this low? I don't know that it's been this low in the last 5 years. So we know when we get a very, very low ADX condition that we are building energy for a new move. There's a new move coming. Now, sometimes when you get a very low ADX condition, you get a move in the opposite direction first and then a reversal. Or you could get a move down and then a move back to the upside. It's kind of like if you were standing still, getting ready to run as fast as you can, you will take a step backwards before you get going. You get your momentum going to the forward, right? So you have to be prepared for maybe a little jab step in one direction to the other and then a reversal. So we're just got to keep a real close eye on what's taking place here in the near term. Now, the easy way to do that is to focus on the daily and the hourly, okay? But we can also get a lot of false moves doing that. Last week, I talked about the fact that this was the time frame that had the low ADX condition, all right? It had this ascending triangle in place with low ADX, all right? And then we made this breakout move and then it immediately came back down through. Now, if we make a second, so a lot of times I refer to this as the first mouse, and he gets caught in the trap, right? Now, the second mouse is with the guy that gets the cheese. He's the one who's going to make the money. So if we get a second move through the breakout area, I think that would be a pretty bullish sign. A lot of times you do get these little fake outs and then we get a trading move. I just don't think we're in the position for a strong, powerful uptrending move similar to what we had last year where we went up for the whole year. I think that's very, very unlikely this year. It doesn't mean we can't trade to the upside. I just think it's less likely that we have a big follow through and a massive move to the upside. If we pull that off and we do some kind of a move like that where we go vertical, then it's going to be ending action in some type of a climax formation that will probably end in an ugly way. All right. Anyway, that's the update for the week. Let me know if you have any questions. Thanks.